Hello, I'm Ian Stewart, Chief Economist at Deloitte, and I'm going to talk about the results of the latest survey of Chief Financial Officers by Deloitte. Now, the biggest single decision any Chief Financial Officer has to make is whether they should take risk onto their balance sheet. And in the latest CFO survey, we've seen that risk appetite has risen to the highest level in 6.5 years. A record 71% of CFOs say that now is a good time to take risk. And I think what's happening is that a combination of much lower economic uncertainty coupled with improving financing conditions have made CFOs much more willing to consider taking risk. If you look at the financing side, CFOs are saying that credit is more available and cheaper than it's been at any time in the last 6.5 years. And they also say that they are very optimistic about issuing debt, issuing equity and issuing capital. So CFOs are risk-loving and they want to bring in more capital to the business to expand. There's been quite a change in how CFOs feel about the world economy. They've become much more optimistic about the UK economy and about the euro area, and they've become less optimistic about emerging markets. And that's a change from the default positioning of CFOs over the last 6 years, where optimism about emerging markets has been really quite high. Now, this combination of high risk appetite and good credit conditions has unsurprisingly led CFOs to expand their balance sheets. There's a lot of optimism about investment, about hiring, and about mergers and acquisitions. Indeed, optimism about M&A is at the highest level in 6.5 years on the survey. So I think the overall findings from this report are that corporates are on the verge of spending, and I think that bodes very well for the kind of corporate-led recovery that most economic forecasters and policymakers are looking for this year.